Hi, everyone. Thank you very much for joining us on this episode of Dr. Linda's show. Today, we are going to be discussing what it takes to build a feminist fintech that is changing the rules. And I have with me here as someone who is doing that already, right? So that's why we have brought her in to share her expert knowledge with us. So with me here is Kristine. Kristine, over to you. Please introduce yourself.
Yes, hi everyone. My name is Kristine Beese. I'm the founder of Untangle Money. We've designed the Untangle Mini app, which is taking women from a place where they don't feel like they know enough about money to a place where they feel confident engaging with the financial industry, talking about their money.
That's awesome. Okay, so just for the sake of those that are watching or listening to us right now, so we're going to. I have a lot of questions that I have here to ask her to unpack that, this topic. But also, before we even get into the questions, we're also going to understand more about her brand and what her brand offers. Then, if you listen to the end, you have the opportunity to ask question or hear the question or other people are asking, right? And so if you are listening and you have question, drop it as a comment. I will take those questions and ask her. So let's get started. So Kristine, if you can take us back to the moment when the idea on Tango Money was born, what was
Yeah,
going on around you that made you say this needs to exist?
yeah. I was reading this book. It's called Invisible Women by Caroline Criado Perez, and she talks about how we should really be disaggregating data by gender. And if we do that, we'll usually find two distinctive peaks of which we should design around. That's kind of the synopsis of it. And I used to be an engineer first, and I knew I could design to anything. I just needed to know what I was designing to, what specs and regulations. And this book really talked about the unintended consequences of not designing for women. So she talks about some gruesome stats around cars. So really high level, a car that has a 5-star safety rating, that is only applicable to a man driving. When a woman is driving, it's only a 2-star safety rating. And again, as an engineer, that made me really angry. But at this point, I had 3 children, and I was working in finance, and I had managed money for really high net wealth Canadians, very, very wealthy Canadians. And my friend came to me and said, I think my marriage is not making it. Financial plan costs $2,000, $3,000. I don't know if I can afford to leave. Can you help? And I thought, that's a pretty basic question. That's really shouldn't cost thousands of dollars to answer. And so I said, yes, I can. And that was part of how Untangle Money came to be. And I really, because I had just been reading the book, really wanted to make sure that I carefully designed it with women in mind. So I didn't miss or unintentionally make their financial situation worse.
Mm, I see. So, what was the problem you really wanted to change? Um, when you first started, and has that problem evolved since then?
Yeah, in the beginning it was answering women's 2 most asked questions. So women wanted to know, what can I afford and will I be okay? They wanted something to tell them that about their money. What can I afford and will I be okay? And that's really tricky because one's a budget and one's a retirement plan, and they're linked together. And so we wanted to be able to do that in a judgment and shame-free way. We wanted to do that in a way that was scalable, so because we knew that it would cost too much if we engaged a financial professional. um, and we wanted to make sure that it was welcoming, so it wasn't a place where women felt this isn't for me. So we really wanted to answer those 2 questions. I think what we didn't realize, so originally we just thought, oh, well, we'll do the 6-step process that FP Canada has laid out. And we thought it was probably going to be more of a marketing exercise, maybe more language and just more of the presentation of the work. But when we launched and did a pilot study, we actually found out that 6-step process is really meant for wealthy individuals. And we had to come up with something different. We actually fell on our face quite a lot in the beginning, tripping over some of the traditional things that we learned from the finance industry and were taught were normal, and didn't actually apply to people outside of high net wealth. So a way that I can explain that is, wealthy individuals have $10 and they want to buy 3 $1 items. And that's a prioritization exercise. 1, 2, 3. Middle income folks also want to buy 3 $1 items, but they only have $2 to do it with. So now we're talking about trade-offs. And how do you do that without applying your own value system? You need to make it flexible enough that it enables the user to decide what's valuable to them, not being sort of parentally told what they should think is valuable. So whenever we heard the word should, that was a sign for us that we'd made a mistake. It took a lot of iterations. It took a lot of working with our clients. It took a lot of trust from them to, share some really sensitive things with us in terms of that. That didn't make me feel really great. And I thought you were judging me, which, were gifts. They were just gifts. And we circled back and tried again and circled back and tried again. And now we think we've come up with something that is really great and probably will need a lot more iteration, but more on the delivery and less on the substance side.
That's amazing, because when it comes to business and building, you talked about something like, it's not about what should be, but looking at things as they are instead of how they should be, right? So and I love what I'm hearing. That iteration process is very important to discover what somebody really needs, or what a woman really needs. Okay, so can you paint a picture of the woman you built Untangle Money for?
Yeah. So we built
like
originally or now?
Now, let me add more substance to that question. Like, sure. What is she facing emotionally, financially, the Untangle Money that you have now?
The first version we have now is for the young professional. So probably entering, either about to enter or has entered their first job. Similar to, so when I was in engineering, I made a lot of money and I didn't know what to do with it. And I knew there was something I was supposed to do, but I didn't know what that was. It's that person that we built it for. Right now, it's getting started on the right foot. Parents like to buy it for their adult children. It's really for the person who knows that she needs to do something about her money, doesn't trust the bank. Their instincts are normally really great around that, and is looking for independent, unbiased guidance on how to go. So they have a long time to go. It's so advantageous if they can get started early. So sort of in their first job, and they want to know more, but they don't feel comfortable in the industry. And probably they also might not be comfortable disclosing their financial information to another person. So this might not be a topic that they're comfortable talking with their friends about. So we call it financial underwear, because I really think that you're really emotionally attached to revealing your numbers, right? It can feel, you feel really exposed when someone's looking at all the things you do. So we wanted to be really cautious and careful around the fact that, maybe we can help more women if they don't have to reveal their financial underwear to other people.
I can relate to what you're saying. No, first of all, is that a lot of times when you find yourself in the position where you're making a lot of money and you don't know what to do with it, it's so difficult to know that is a problem if somebody hasn't been there yet.
Yes, yes. And I should say, you don't have to make a lot of money, but it's a lot of money to you compared to babysitting, right?
Exactly.
It's the first time you're making, 5 figures. We didn't make it for wealthy individuals. It does not work if you're high net wealth. It's really designed for middle income. So middle income means that you don't have $1 million in the bank to invest. You're making less than $200,000 a year, but you're also not on benefits. So you're not lower income at this point.
Yeah. That's really a good place, because, for example, like at one point in my business, I was in that position where I was looking for what to do with money, and
Yeah.
it was a real problem because you don't easily find solution. Then I saw myself going to conferences,
Yeah.
trying all kinds of investments and losing money on them as well, right? Like,
Yeah.
so this at one point you just say, oh, maybe you can just buy another business, and then you buy the business and your eyes is not there, or because maybe that's not even your area, that's not your
Yes.
legacy, and then the business fails, or you see yourself doing something with that money. I truly believe that if you have money and you don't know what to do with it, that money is
Yeah.
going to go.
Yes. Yes,
It's going to
absolutely.
go.
If you're not intentional, it'll
Hmm.
just go through like it just runs away from you.
Hmm.
Yeah,
True.
absolutely. I
Yeah.
don't think you're alone in that. I think that's very human.
Hmm.
That's
I
totally
get it.
human.
Yeah. And then the second one you talked about is when people don't trust like the traditional financial system out there. That's also a thing.
Mhm.
For example, at Investonomy, where we teach people stocks, most times all the time we talk about doing it yourself, right?
Yes.
I have people, I'll be like, go to the bank. This is the type of account you're going to open with the
Yes.
bank. And then they come back. This has happened several times. They come back and tell me, oh, the banker asked me to open a different one.
Yes.
Like a
Yeah.
lot of time, like you have to go back, you have to cancel that account, and
Yes.
then ask them to open this specific one.
Yes.
So when you say something like when it is said that, oh, somebody does not trust the system, it looks like you're just bashing the system. But there's a lot that goes on that, except
Yes.
you're really in that industry, you wouldn't know. So when somebody's instinct is speaking it that, well, I need to talk to an independent third party.
Yes.
Like
Yes.
I vote for that anytime, any day.
Ev- Yes, I think women really dislike high pressure sales situations, and they can feel the requirement of the bank branch person to sell them a certain number of products. And then they recognize it's not aligned with their best interests, and they don't feel they have the skill set or the capacity or the language to 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 fight for what they want. And that's what we really want to help them with, is that clarity, so that when you go and talk to them, you can say, no, that's not what I want. And so
Mhm,
very similar, we see the same thing with mutual funds versus ETFs. We want people to, if they're not comfortable investing on their own, really find ETFs that work for them, and
mhm,
maybe use a robo advisor instead of a bank.
mhm.
But I think their instincts are spot on in this case, that banks aren't really there to be your friend. They kind of have done a great job branding. And if you like the bank, you're probably not looking for a solution like ours,
Mhm.
potentially.
Okay. So what services or products do you offer at Untangle Money?
Yeah. So we have one service that mainly that we offer, which is just the Untangle Mini. And so there's a self-serve version, there's a full-serve version, and then there's a concierge version. We call it the Maxi right now, but we'll rebrand it. The self-serve version is $150 one time to get a budget combined with your financial plan. And in there, we sprinkle financial literacy throughout. The full-serve version is the exact same thing, except you do it with me. And the concierge version is just for high net wealth, which has different the model is a little different, so we have to work with them a little bit. It's a bit more bespoke, so there's just more work that goes behind it. Right now we call it the Maxi, which used to be a full financial plan, but we really want you to start with the Mini, because I'd rather you do the Mini 5 times than the Maxi once. um, a full financial plan has so many assumptions built into it, and it's looking so far away. It is
Mm,
not a crystal ball. And I really want people to stop thinking it's one and done, right? Think of it like your physical health or your teeth, right? You need to go back every year to get a checkup to make sure that the trend is in the right direction. It's not just one point in time. You really want to stay on top of these things over time. So I'd rather you do it every other year,
mm,
and spread out that expense, rather than do one really big one that is only valid for the next few months, maybe a year if you're lucky. And so that's what we offer. We offer the Mini, either self-serve or full serve, and then we'll offer it to high net wealth individuals as well.
I get it. So I know we've talked about this in all the questions you've been answering earlier, but I just want to be able to bring it out for that person that is listening so that it's not lost in all the
Yeah.
conversation. So, what does Untangle Money do differently than traditional financial planning tools or advisors? And why does that difference matter so much?
Yeah, there's a few things that we do differently. We combine a budget with a retirement plan and the financial literacy. So the reason we combine the budget with the retirement plan is that, if you get your money working harder for you, you might not need to put as much money away. So you might open up more room in your budget, and vice versa is true. We also want to be able, so what we kind of show you, we start with some assumptions and we say, here, we're going to start here, very conservative place. And we say, here are two options. Which one feels better to you? This one or this one? Okay, that one. Okay, then we're going to go on. Okay, here's another option. Which one feels better to you? And we do in there, we teach it, we talk about it, and there's learnings, and we explain why we're teaching you about it and what's important. And then, but we really, which one feels better? Because we don't, just because something's mathematically better does not mean it's emotionally better. And emotions are really important. And I think the finance industry completely ignores that. And so the other thing, so that we do that 12 times. And at the end, you'll have learned a lot about money with your own numbers, right? It's not some theoretical construct that's out there. This is how this impacts your money today. Which one do you prefer? So I think you're more inclined to hear it, right? Because it's not, you don't have to apply it, we apply it for you.
Mhm.
It's not, it depends, because we know what it depends on. The other thing we do differently, again, is that emotional piece. One of the things that we know is that research says, as humans, we need to find joy from our spending. So
Mhm.
I want us all to stop pretending that if we tell women to stop doing their nails, they're going to fund a retirement. It's total crap. That's not true. You have to get joy from the money you spend. It's a human condition. So again, not low income, not high income, middle income. This is research done on them. And so we know what that threshold is, and we know, so we focus on that. We say, okay, the average Ontario woman in 2019 had $4 for every hour that she worked that she could spend on stuff. You better make it count, right? Like, are you spending those $4 in a place that makes you feel good? So if you want to spend $100, and you want, and that's 3.5 days of work, sometimes you're going to be like, yes, absolutely. Every day of the week, I'm going to spend 3.5 days doing that. And other times you're like, really? 3.5 days? I don't know. It's just not worth it to me. And that's how we got rid of that should or where, judging what you spend. Because when I was younger, the coffee, I loved my coffee. I had my fancy coffee. I didn't know anything about coffee, but I knew I worked with a lot of old men who didn't really see me as an adult, but my coffee did, right? So it did something to me. I wasn't a student anymore. As a professional, it meant something to me. Now I drink instant decaf. And coffee doesn't have this, it doesn't, I don't value it the same way. And so how can I speak to my younger self and tell her, not like, if you didn't buy the coffee, you could retire? It's not true. I would have spent the money on something else. And I need to spend that money on something that gives me emotional return, right? So what is that emotional return on the money you're spending? And so spending intentionally. So the difference is we put it all in one place so you can get a clear path and you can see those differences. And then we also include the emotional needs that you have, and we include wellness moments. So an example is, we know that debt is hard to talk about. So we do a breathing exercise beforehand, because I don't like talking about debt, and I want to center myself first. You don't have to do it. They're totally optional, but they're there if you want that support, because your nervous system's saying, I don't want to talk about debt. I really don't want to go talk about debt. I don't want to do this anymore. So breathe through it. It's going to be okay. Let's go. Right. So we really try and include that in our design.
Okay, thank you very much for elaborating, because it's also it's an important question, right? So that somebody understand, what the exact difference that Untangle Money is making for them should they decide to with that option. Okay, let's again go back to the topic of the day, which is what it takes to build a feminist fintech that is changing the rules.
Mhm.
And so our question is going to transition a bit, which is, you've said money, women's money is different from men's. Can
Mhm.
you, unpack the why behind that?
Yes. So women's money is really different from men. And it's almost in every single aspect you can think of. So, credit scores. Women should have higher credit scores than men. Right now, we're just even, but we are better at repaying loans than men are. And just like insurance, our insurance should be lower because we're better drivers than men and we get in less accidents. Similarly, we should have higher credit scores because we're more likely to repay the loan, even when our credit scores don't indicate it. So if you're looking at credit score as a way to judge if someone's going to pay back the loan, it does a really bad job when it comes to women. And that's just such an obscure reference, right? That's just one thing. But there's the pink tax. We go into jobs that pay us less. Like we go into industries that pay less overall. And then in those industries, we get paid less than our male counterparts, which is well known. Less well known is it takes us longer and we get less promotion, like we get less of an increase. So we have longer and lower promotions. So it takes us a lot longer to get through. So I heard a commencement speech and the woman said, if you want to know how much has changed, it was a commencement speech to MBA students. They said, ladies, look to your left and your right. In 5 years, these men are going to be your bosses. And I'm a couple of years out of my MBA, quite a few years out of my MBA now. And they were bang on, I married a man I met in my MBA, and he onwards and upwards, whereas I really felt like I was held back and I had to prove myself before. And, we have so much evidence that that's true. And the more intersectionality you have, the more you have to re-credential and more you have to prove yourself. And the harder you have to work just to get back to even when maybe you were even already more you had higher skills or maybe better credentials than the people you were competing against. So that all translates and filters into our money. And so to sum it up, can I show visual aids? Is that okay?
Sure.
Okay. So this is US data, and I apologize. So US data, I don't know if you can see this, but this is women and men who have a bachelor's degree or less. This is US data. And so you can see women's salaries plateau. This is 40, right? So this is $90,000. So these people is it 90? No, this is 90. It's $85,000. So they're already making good money. But then you see Owen, his trajectory up until he's 55, right? So this area, this is $10,000 to $20,000 more per year, each and every year for more than 25 years that Owen has more money. And it's not Owen working the same job as Sandra, right? This isn't like to like. That's where I hate the pay gap, because it's me against the guy that's 10 years younger than me earning the same. And they're like, but Kristine, you get paid 87 cents on the dollar. I'm like, thanks. I'm also 10 years, maybe 5 years behind where I'm supposed to be. And then this is from the Bank of America, Merrill Lynch. They added it up and it's over $1 million that we have less over the course of their lifetime. So the one thing I don't focus on anymore, in the design of the financial plan, because we thought originally, oh crap, financial plans are not designed for women. We found this amazing quote from the World Economic Forum that said, planning for retirement should look different for women and men. If a woman uses a men's financial plan, it's going to fail them. And we said, oh, here's our big problem. Everybody's going to want a female designed financial plan. And we designed it and nobody cared. So painful. So we designed a plan that works for women in this way. And how we do that is we just don't make any assumptions about your salary growth. We assume you make exactly what you do today all the time, except it increases with inflation. That's it. Because I don't know if you're going to have maternity breaks. I don't know if you're going to take time off for elder care responsibilities. I don't know if you're going to be hit with the glass ceiling or if you're going to be the exception to the rule. So what we want is for you, we want to use a conservative estimate. And then as things improve, so we hope that there's a lot of room for improvement, then your financial situation will keep getting better. And the reason we did that is it's really hard to work with less. It's really easy to work with more. And that was the only way we could kind of manage all the variables. But nobody cares about that part. No one cares. The other kicker is because we earn less, that $1 million less, that also means we're contributing less to our state pensions, so CPP and QPP here in Canada, and our corporate pensions, just because it's a percentage of your salary. So if you're earning, and that means we have less coming in a retirement, and we need our money to last us even longer because we tend to live 5 years longer. So there is so much that's different about women's money. And what we're trying to say is that's not right. We don't want that to be true. But with where we are now, what can we do to improve it? So we show you that when we're showing you the options, we show you the ones that will help you improve it the most, or things that, we show you what happens if you wait 10 years, because we're trying to bias you to action. We're trying to say, hey, the earlier you start, the better, but I don't want to tell you that. I want to show it to you. So we show you with pictures the difference between starting today and starting in 10 years. And then we also want to be really graceful, because a lot of women are moms and a lot of us are in the do it all years, and there is just no more money, right? It all goes to childcare or all the other things. And so we also want to say, okay, we get it. Or not even. One woman said to us, she was amazing. She's like, that sounds awful. I don't want to live that way. And I loved it though, because we said, oh crap, right? How do we adjust for this? So we also have, okay, we get it. You're doing all you can. Okay, this sucks, but maybe what happens if you work a little longer? What happens if you get a part-time job when you retire? What happens if you have, so there was just an article in the paper the other day, the Globe and Mail, they said, Golden Girls retirement. It's something we see globally. We see it in all countries, except not so much in the US, but we see it globally, outside of the US. Women living together in their later years, because they're lowering their cost of living. They're getting some community. And this is a way to make your money stretch. And so maybe is that, it's like Marmite, people love it or hate it. But, if you don't mind that idea, well, then maybe you don't have to prioritize retirement as much. If you hate that idea, maybe you want to focus a little more on your retirement savings, right? So it's to that woman who said, I don't like this. She's like, I don't feel like I'm going to retire ever. I'm happy to work we do a minimum wage job, because we don't want it to be something that people can't do. And then she's like, I would love to live with my friends. And so she didn't have to save any money, but she had to manage her expectations about what her future was going to look like. So she didn't have to put any money away, but then she had to have a very cheap retirement lifestyle. And then that worked. And so I forget where we started with that question, but I feel like I'm taking us on a ride.
No, you unpacked a lot, right? Like you brought in a lot of the things that is different for women, and then translates their money, and even with the graphs that you showed, that's really very informative.
It's so painful too. I started to cry when I saw it the first time, because I was just over 40. I just had my third son, and I was interning in a program called the Return to Beese program, and I'd never made so little money in my life. I was earning the least amount of money I'd ever made, and I just felt like such a failure. And it was awful.
Yeah. Okay. What are the things women need to do differently with money? Mm-hmm. And how did you identify those core shifts?
Yeah, so there's 3 things. So before I go into them, I just want to say women are amazing with money. Most people don't realize women are better at investing than men, which I'm sure is something you've talked about a lot. But and we're great at saving. We save more than our male counterparts as a percentage of our salary. We have less because we earn less and because we don't get it to work for us. So women are great with money. The 3 places we could improve is we have to start earlier. We underestimate how valuable even a small amount of money invested for a very long time is. So we have to start earlier. Time is our biggest asset. Start today. What can you do today? Get either, figure out what account you need, figure out something, start today. We need to sit on less cash. I think there are a lot of money stories that we have around cash. And I think it has to do with escape. I think it has to do with the man versus bear. I think it has to do with lots of things. I think it has to do with our roots. I think it has to do with, stories we've been told from our ancestors. But sitting on too much cash limits your options. You want that money invested for you. You do need some cash on hand. That is going to change. If you're thinking of leaving your partner in the near term, then yes, maybe cash is the best place. But you have to think of it at the time horizon. If you don't need that money for the next 2 years, please have it invested. Most of it, there's a minimum amount you need. It's around $4,450. Anything more than that, it should be invested. You need access to more money. It should be invested, because the time between now and when you'll actually need it, it'll has the opportunity to grow quite a bit. And then we need to take more risk with our money. And I always hate talking about this, especially when the markets are doing poorly. What I mean by that is money that you don't need for the next 20 years, a professional investor will have you in 92% stocks. That's because over a 20-year time horizon, yes, it's going to be bad. Yes, it's going to go up and down. But over a 20-year time horizon, that gives it enough time to go up. And so, a professional investor will have you in 50-50, half bonds, half stocks at retirement. Most women start there. So we're missing all 20 years of having our money really working hard for us. And so I encourage everyone to go to Quest Wealth. They have, and look at their ETF buckets, and then look at the difference between the 5 different options they have, and look at the shape of the graph. It's largely the same. You'll see hump, COVID, hump, and then a recovery. And then you'll see now a new crash. Hump, COVID, hump, recovery. And the things that change is, yes, the ones that are higher risk end up, you'll see the downs are lower, but the highs are much higher. And so again, you need that time horizon. So those are the 3 things women, start earlier, start today, sit on less cash. So get your money working for you. And when you do get it, money working for you harder. And so again, this is mainly your retirement savings or things that you need for the future. There's different strategies, midterm or short term, but those are the 3 main things that we really want to see women doing differently with their money.
Amazing. You've said it, you've summarized it. So I'm just going to leave it there and move to the next point, which is in your work, have you noticed any emotional pattern, be it guilt, fear, shame around money that uniquely affect women?
Yeah. I think women are shamed for every single money decision they make. Oh, you spent that on your kids? That's so silly. You're going to spoil your children. Oh, you didn't spend that money on their kids? Aren't you so selfish, right? Like, you cannot win for trying. You buy nails, you buy like any makeup. Oh, you don't buy makeup. Oh, so if you don't spend enough, if you don't look nice enough, you don't get promoted. If you look too nice, then you're a trollop, right? It's just, you cannot win for trying. Spend too much on your hair. Don't spend enough on your hair. You just can never win women and money. And I think that really makes us, again, that sort of shame in revealing our underwear. You feel really exposed and you feel really vulnerable was the word I was looking for earlier. I couldn't find it. You just feel, and we're shamed for every choice we make. We are shamed. You sent your kids to daycare. What a bad mom. Oh, you're not working. You're staying at home. What a bad, I don't know. Everything, even if it's the traditional way, we're shamed for it. And a way to kind of, I get a lot of pushback on this. And I said, no man that I know has ever been shamed for buying a bottle of scotch. And it's like, it's a vice, if you think about but it's masculine. It has like a connoisseur. It's high class, right? Like, ugh. Yeah. I think for women, money is a really hard topic. And we are, from a young age, if you look at magazines that are targeting women versus magazines that are targeting men, the men they're told, create generational wealth. It's aspirational. It's like, build this, buy the car, really luxurious items. Women, it's like how to stretch a dollar, how to manage the budget, do. It's all focused on the short term. It's all like stretch a dollar. And I'm not saying that actually aligns really well with how the money is managed in a traditional normative or hetero household. However, how much of that is just because we've been taught that that's the way, especially when you say, but women actually make better investors. Women are great at long-term decision making. Women have a better skill set innately women are less emotional about the performance of their investments. And I think that's because by the time we invest, we're actually really confident in the way, like we know why we're investing that way, because we had to do work to get up the curve to get there. Mm-hmm. I don't think women are more risk. I don't think we avoid risk. I think we don't like taking risks we don't understand. So we're not risk averse, we're risk aware. And since we're less likely to make investment that we don't understand as well. So once we're there, we do a better job. So we saw this during the COVID pandemic. The market was selling off, and the market is predominantly run by men. It's like 80-90% men. It could be even more depending on which aspect, how you want to look at it. Money management, I think, is close to 95% men. And then, there's a company in the United States called Ellevest. They were a robo-advisor specifically targeting women, and they saw net inflows. That means women were buying the market as the COVID crisis was happening. So they were buying low sell, that's the first part of buying low, selling high, whereas the men were selling low. And I don't want to disparage them. I've worked on the trading floor. They call it catching a falling knife for a reason. It's different when your pay is also on the line, and you have restrictions for how you can invest. And there are different issues at play. And I don't want to belabor it, but women are really great at doing the research and doing what they're told. And buying low is really hard to do, and selling high is really hard to do. And women are much better at it than men. Like career making difference better at it at the retail level. That's you and me, everyday people, and at the professional level, professional money managers. So,
yeah. And I feel that your background, right, working, at the stock exchange, on the trading floor and everything, it also has given you extra perspective that even normal people won't have. So
yeah.
I loved you sharing your expertise with us.
Thank you.
Yeah. So what does it mean to build a feminist fintech?
Yeah. I like this question so much. So it is hard. It was really important how we built it. I came from a background that, invest in capital markets in general is not really family friendly. Even like in terms of what they talk about, the hours you have to put in, all sorts of things. It just culturally isn't very much anything that I want to spread in the world. So I wanted to make a company where our values were feminine. And so, taking care of ourselves first, trying not, unless, no one's life is on the line. We're not saving anybody from a heart attack. We're not. So, trying to be graceful in how we manage it, trying not to perpetuate some of the things that we saw before. It's hard because your instincts and what you saw work aren't tools you want to reach for. And so, we worked really hard to collectively come up with our mission, vision, values. And it's the first thing we send people, and we say, make sure you let us know if we're falling short of this. But it means we grow slower, and it means we build slower, and it means that we are graceful when people tell us they can't. And I think one of the things is learning how to still hold people to account while not making them feel like they have to stay up all night to get there, right? And so more communication. The other thing is anybody can use our product, right? Any gender. Women, non-binary, men, engineering men love it. Couples love it. It gets them on the same page. They have the same framework and the same understanding. Tech bros hate it. I don't know why. But anybody can use it. It's just, it has to work for women first. And so I like to give this example. The first franchise in exercise that I know of is Gold's Gym, which was this like bodybuilding, black, very testosterone fueled hellscape that resonated with men largely, and some women. But and the rhetoric at that time was, oh, women like to walk, women don't like to exercise. Sort of the 80s. And then, along came the yoga industry and the wellness, or, all these you can dance, all these different types of exercise, really more targeting women. And so there's a lot of different design decisions that went into creating a Gold's Gym versus creating sort of yoga, Pilates, Zumba, dance, fitness, any other trend on that side. And we really want to make sure that it works for women first, because we know that we already know how to build it to work for a man. And we already know how to build it in a way that doesn't penalize the man, because that's what exists. It's not saying that every man loves it. I'm not saying it works for all men, but I'm saying largely this already works and we already know how to sell to this person. What we haven't figured out is how to sell to women, and we haven't figured out how to make women feel good, and we haven't figured out how to do it in a feminine way. So when I think of building a feminist fintech, I want to make sure it works for women first. Doesn't mean that men can't use it. It just means that more women feel comfortable buying it than they do what's out there now. So it's kind of how
I understand it.
Yeah.
Yeah, that's putting a perspective to it there, because when you say feminist fintech, is like, okay, but bringing it back to, okay, the purpose, and it's more like saying women first. not
Yes.
women only, women
Yes.
first.
Yes. Yeah. We need to change the language around it a bit. Because I think when women hear design for women, we've trained women to think inferior. And so we struggle with our name as well. So the mini, we wanted it to sound small and light and not simple, but like, you know, it's not a big lift. It's not this full. It's just like a little thing that will make you feel a lot better. But when we take the maxi away, which is the fulsome plan, then mini feels pejorative. It feels like women can't do math, right? And that's not what we want. And then the other problem with the name is, or the other problem with saying it's designed specifically for women, which is, nobody, turns out nobody wants a woman designed financial plan, even though we need it. It's because, the pink pen costs more, but all it does is write in pink. Or like we've been trained that I use Rogaine because I'm losing my hair. And I use the men's one because it's the same stuff, but it's 30% less, costs 30% less, exact same chemical. So I just buy Rogaine for men. And we're trained that the women's one is inferior. And so I think we actually have to do some thinking about the language we use. And we're not there yet, but I think you've pointed out something really well. It's not women only, it's just women first, right? It has to work for women. Thank you for that.
Oh, thank you. Okay, so in this business and you raising awareness and pitching your idea, have you met people who don't believe that there's a difference between how women handle their money and how men handle money? And what do you
Yeah.
say to those? How do you respond?
Yeah. So the reason I have all the visual aids and the reason I have all these books that I demonstrate is because no one believes me, women and men. Some women, I should say, do believe me. But I think there's this genuine discomfort, especially amongst men, that it's unfair and they don't want to know and they don't want to look at it and they don't want to think about it. And oh, it can't be that different. It's only, and it doesn't sound so bad. 87 cents. It's like an A, right? It's like almost an A plus, right? It's how bad can that be? And they don't see the compounding effects. And so that was one of the things that it's really hard to describe. And it's really hard to sell from fear. And it's really hard to sell from, oh, did you know it's so bad? Instead of here's some things you can actually do, that, right? It's really hard to sell that way. And I think women are kind of getting tired of, especially before whatever happened in the States happened. I think there was this exhaustion with EDI or oh, we know it's harder for us, like stop telling us it's harder for us. We know. And so we weren't able to raise any money other than through women angel investors. And I think it really impacted the ability for investors to believe us when we said, hey, this is an actual problem. And I think it also made selling the product harder too, right? So it just really, it's challenging. Again, women don't like products built for women because they've been taught that they're inferior and they're not coming necessarily from a good place. And then again, not all women, but we definitely, there's enough of it that we don't see it. So and then we're also, we're really pushing uphill because women don't adopt fintechs as quickly. So they are slower. And again, justifiably so. Their instincts are right in a lot of these cases. But when someone comes along that's like, no, legitimately, I'm trying to help you, and I really believe in this, and I've really this is well thought out design. Like we've taken a lot of effort, and it took us a long time to come to the solution, and it's not the same old thing. It can be hard. It can be hard to get traction. So yeah, it's been challenging all around.
Yeah.
And there's one stat I heard right after I launched the company, May 20th, 2020. 25th, 2020 is when we incorporated. And in June, I heard that women would rather learn about finances from a man than a woman. But it's like societal and normative, and who have we been taught to trust about money, and who have we been taught knows more about money, and so yeah.
And just like what you're saying now, these are some of the things we've come to learn from the society. Sometimes it's not like society took your permission before feeding you those informations, from magazines to TVs to what you see around. But the work you're doing is also important because that is how those narratives are going to get changed,
Changed.
right? Because if like because it has been that way doesn't mean it should continue that way. So
Exactly.
um
Exactly.
and obviously for people that are leading the path, it's going to be tough,
Hmm.
right? But then it doesn't mean the path is not worth walking,
Right.
right? So
Right. Yeah, exactly.
yeah. Do you have like maybe a case study or story to share with us where you saw your product shift a woman's financial mindset or outcome?
Yeah. We worked with a woman who has financial individuals in her family, and they have been trying to convince her to get her money to work harder for her for probably a decade at this point. Um, and she just didn't want to. And so right off the hop, she said, I don't want you to tell me to get my money working harder for you. And I said, well, okay, but it's part of the process. So just when it comes to that point, you're just going to say, no, I'm not comfortable. Um, but we still want to show you how it impacts you. And so we walked through it, and she said, you know, I've been having conversations with my sister and her husband who work in finance for a decade, and they never explained it the way, because they didn't use pictures, they didn't illustrate it, they didn't talk about this 20-year horizon, they didn't show some of the things that we've, again, because we've fallen on our face so many times, that we had to sit there and think, oh, how can we do a better job of this, right? It wasn't her sister or brother-in-law's job to do that. It was our job, because that's what we said we're going to do. And so we came up with different ways of explaining it. And I said, so when we got there, I said, I know this isn't something you're interested in. We'll go through it, and then I'll put you back to where we start. And we go through it, and she goes, no, actually, I prefer that. And then at the end, she said, this was really transformational. I've never thought of money this way before, and it feels so much more like something it feels clear, and I can wrap my brain around it. And I don't feel like I'm in a fog. And I said, thank you very much. That's great. That's exactly what we're trying to do. We're really trying to give you clarity and simplify your financial decisions so that they line up with what you value and not what the finance industry wants you to value.
Mm.
And so that was one of those days where it was really easy to keep going.
Yeah, that's a great story. What do you think society would look like if more women felt confident talking about money, earning money, and investing money
I think
openly?
we have a lot more options. I think we could leave relationships that don't serve us. I think we could change jobs that don't serve us. I think we could invest in products that we need. And I think we would be able to really enhance the women's ecosystem. I think I reflect back on when there were questions that a teacher would ask that would divide the room, right?
Mm.
Boys versus girls, largely, right? And I think in all the spaces where men are the predominant decision makers, those hands that went up with the girl question, and I know I'm oversimplifying things, but there's a lot of situations. I was just dropping my kids off today, and the dad's kind of coalesced and the mom's coalesced. And again, not always. I grew up kind of a tomboy, so you know, I know it's not always, but there's just things, and I think all of the money that's getting invested is largely controlled by men, and so no wonder they're getting their things looked after and their problem solved, because those are the problems that they want to fix and solve. And I think if we have more money, it would change our optionality, and it would change the way the future looks. And that's exactly why we want to have a financial plan in the hands of every woman in the world. We're starting with middle income. We're starting in Canada. We want to blow it out. We don't want to go too deep, right? We want to get you comfortable with money, and the money conversations, and get you up to speed so that you can use the whatever systems in place, which isn't perfect, but it's pretty good,
Mhm.
that exists, so that you can use it to your advantage. And we think that problem exists in every country in the world. So we want to disseminate it widely before we go deeper.
That's great. What has been your approach to user feedback?
We want it. It's a gift. We prioritize it based on two things. What can we do? like, especially now that it's a technical solution, like what do we have the money to change, and what, and how much of an impact does this have? But before, when it was just us reiterating the process and reiterating an Excel spreadsheet, which I can do myself, we took it all and we said, great, thank you. We learned that for a lot of women, hair care is not optional. It's not something that they can just, it's a choice, and it's a cost of living. We heard that sending money home for a lot of women is not optional. We learned that, and then by not having that, or tithing isn't optional for a lot of women. So not having those input lines made them not feel seen, right? So we changed the way we did stuff. And those were gifts. That woman who said, I don't like that, that sounds awful, that was a gift, right? We wouldn't have come up with, a lot of us are in these positions where we're doing the best we can. And, it's not fun to think about the fact that you can't retire at 65, but at least, if nothing improves, you have a plan. And again, we like to do the worst case scenario, or, we want to make sure that everything gets better from here, because, I want to swear, but frustratingly for women, sometimes it is the worst case that we get handed a lot of the time. So we want to really, work with that, and so yeah.
I get it.
Feedback's
How big
incredible. Sorry.
Yeah, how big is the change you are hoping to create through Untangle Money?
Massive. We want women, I'm not kidding when I say I want every woman in the world to have a financial plan. I want every woman in the world to understand where they are, where they're going, and how they're going to get there. That's all a plan is. It's, you make a plan when you go to the grocery store, and you're more likely to stick to your meal plan. You make a plan if you have any sort of personal goal, and you're more likely to attain that personal goal. If you want to run a marathon and you have a training plan, it's going to help you decide if a marathon is the right goal. So, I don't run, but let's say I did, and I have 3 days a week that I can do it. And the book says, well, if you want to run a marathon in a year, you need to run 5 days a week. And I'm like, well, crap, I only have 3 days. I got 3 kids. So then maybe I say, okay, maybe it's a 5K. Right? That's what a plan does. It helps you with these decision-making things, and helps you figure out what works and what doesn't. And money is everything, everywhere, right? And we don't have a way to plan for it. It feels like a mistake. So we want to be so successful that the titans of the industry change the way they work with women.
That's huge. I love that last statement.
Too.
Because I think demand as well, which, like, just like the challenge you are explaining, right? Many people who are investing in things, or even investing in a startup, they're looking for return on investment.
Yeah.
So that also ties back to how much demand is there for that thing that is focused on women. So sometimes you have all the great intentions, but the demand is there, which is why we're creating this awareness as well, talking to women to say, hey, you need this thing, show more interest.
Yeah.
it will
And
benefit
it's not coming from a place of trying to take advantage of you. And again, sometimes their instincts are really right on this one, and it can be hard to say, okay, I'm going to try again, right? And because so I understand where they're coming from too, but we want to make it. We really want to see a step change in the world, and that's why we needed it to be automated, because I can maybe talk with 10,000 people the rest of my career and help, in the tens of thousands, maybe if I'm lucky, probably low tens. I want to impact 1 million in the next 4 years. I can't do that without scale, right? You can't disseminate it widely enough without scaling and making it something that women can do for themselves by themselves. So.
Okay. So, in your opinion, what transforms a business into a movement?
I think it's when the emotional impact aligns with the vision of the company, right? So we really want to harness the emotional impact that we have on women. And anecdotally, we see a reduction of 30% in women's source of financial anxiety. And what I mean by that is they come in at a 7, 8, 9, and they leave at a 3, 4, 5, self-disclosed. If you come in at a 4, I'm not going to move you. You're going to leave at a 4. But I think when those emotions and that feeling of clarity and that feeling of calm aligns with the fact that we want to help women with their finances and their financial clarity, I'm hoping that that's going to turn it into a movement. Because I think there's so much stigma around money. Women would rather talk about their own death than talk about their money with their friends. And I think with that kind of stigma, the only way we're going to reach our goals is if we can figure out how to make it a movement, because you need something that's stronger than the discomfort to get there. And that part we haven't figured out yet. That's the next milestone. But it's going to be important because there is such a hurdle to women wanting to do this, right? There's I hate math, I don't feel comfortable. My husband does it and I wouldn't want to demasculate him. There's just so much wrapped up in this. It needs to be a movement to overcome these things, because then you get the momentum of the wave, right? You get that you're not in it alone. You're doing it, with other women linked arms and stuff. So yeah, that's what I think happens.
Yeah.
What do you think?
Yeah, for me,
yeah.
Oh, I was not planning for that question to be flipped
Sorry.
back. No, but
it's a great question, though.
Yeah, I think, for example, the advocacy piece, which you have been doing very well. Like, I've been seeing you on lots of, from Global Mail to all ends of the earth, right?
Yeah.
Talking about this. So I think that's what it takes. For example, I was having a conversation with someone. The example I want to give is from another area of the world.
Yes.
I grew up in Nigeria. So right now in Nigeria, a young person is an example. A young person finishes school, like graduate from college, and the first thing in their mind is not how am I going to get job, because it's also difficult to get job, but it's more of how am I going to start a business? What skill, what skill trade can I do? What business can I do?
Yes.
So people move towards self-employment first, but it was not always like that.
Right.
So I was talking with someone yesterday, and I was remembering that around, let's say, 2008, 2009, 2010, I remember somebody like a journalist was asking me, hi, we know that there's a lot of conferences going on talking about entrepreneurship. Do you think it's too much? And I was responding that, see, it starts with the talk and then it moves to the action. So as of that time, like 2010, it was not natural for people to graduate and start thinking of what business they were going to do. Is you graduate and you're looking for work and maybe you don't get work and you're like, hey, no job. But now, to the extent that what we are seeing now is a lot of people want to go the self-employed route, that employers have to step up their game to retain workers.
Good. So that's amazing.
So the point is that for anything to eventually become a movement, it starts with the talk. Even though at the point when the talk is happening, it looks like it's just talk, it's just conferences, but that's how it's going to start. There's no any other way. So it's more like, so the talks are important. The articles, the conferences, the conversations around this, that's the first step. And soon we're going to also see people as more people attend those conferences, hear it over and over again, then they begin to adopt the mindset, the action, and then change occurs. It takes time.
Oh, I really like that. That's amazing. Thank you.
Yeah. And if you look at the dates I called, this interview we're doing in 2025, and I'm talking about 2010. This is 15 years later.
Yeah.
Of course, I'm not saying it's going to take 15 years, right? Because these are different geographical places and all of that. But I'm just saying that it's not, most times it's not days. Right. But
no, and I think it's actually, it isn't, we say we want to do it in 4 years. I think we have to get a lot of lucky breaks for that to happen. We say it that way so that we're not, it helps you align the types of strategies you're trying to do. Like, is this a 300,000 person strategy, or is this a 10,000 person strategy? How many 10, and it sort of helps you think it isn't something that happens overnight. It isn't. And I think it, like I try to think with parenting, important things take time, and they're hard.
True. Okay. What's your vision But I know I've asked you the question I asked you before is what what's the change you want to cause, right? But the
Yeah.
question now is like, okay, let's say 5 years vision. What's your vision
Mhm.
for Untangle Money?
Yeah, so in 5 years, I would really love it if we met that million women in Canada, have a financial plan. I want to be in at least 5 more countries by that point. I want to have figured out the problem of how do we translate this in a respectful and empathetic and graceful way into those cultures, right? So we'll probably start with English speaking countries first, or places, offering it in English to different countries. But I think that is also limiting our impact, right? So then how do you translate it in a way that fits the cultural narrative? Work with, like the money stories we tell each other can be very specific to nations and communities. So how do we do that? And then in 5 years, if everything's going well, I also want to be starting to figure out how do we get into the hands for low income women. um, you know re Putting that money back into figuring out how to get beyond the right now. It's really for young up and coming, or women who are just starting their first jobs. How do we then broaden the people who are going to be using it? How do we, non-binary offering, male offering, but also that low income piece is super important. So if we are making enough money, that is I was so gutted when we worked with we talked to a lot of women's shelters, and we wanted to give, if someone bought one, we wanted to give one to a woman in a women's shelter. And they said, you're really oversimplifying it. There's just too many other things that aren't being considered in your product right now. And so we had to put that on hold, but that's something that's, I really want to get to. So
Mm.
that's my vision. More like strategic vision.
Yeah, I get it. What's your advice for entrepreneurs who are, building brand for women?
Um, Talk to women. Try to talk to lots of different types of women. Talk to people who don't feel seen with whatever is currently available. And then this one's a little bit off the cuff, or like a little off the path, I should say. But there's a podcast called We Regret to Inform You, and it's about all these people that were rejected for decades, and then they do well. And it just, the tagline that they end with is never ever give up. And I think sometimes you need inspiration, and you need to look at places, because entrepreneurship is just, it's more rejection than. That's why, like, when that woman said this was really transformative, it really, like, it made it easy to go for another week, because I knew I was going to face 50 people telling me I was crazy and stupid and this is a dumb idea and it's never going to work. So you're going to hear that so much more than you're not. So, finding whatever your inspiration is. I love the podcast We Regret to Inform You. But because there's a lot of women examples in there.
Mhm.
And so I thought that was really nice. So find your touchstone that helps you think never ever give up.
That's good. Okay. What is one question you wish that I asked you that I haven't asked you yet?
I thought you did a great job, actually. I just if I don't have a question. I would love to interview you one day, actually, because I think your questions were really on point, and I would love to hear some of your answers. So I need to do some better homework and hear what you have to say.
It's all right. Thank you very much. So we've come to the end of this episode. Thank you very much, Kristine, for coming in and sharing with us your insights.
Thank you for
Okay.
having me.
Yeah. And for those watching or listening, thank you very much for joining us today. So have a great day. We'll see you in the next episode. Bye.
Bye.